Hello from the Tukas Copy TV studio in Geneva. We are back with our weekly technical analysis with Jean-Francois Owczarczak from the Management Trust here in Geneva. Welcome, Jean-Francois.
Hi, Daniel.
So with the euro, we still have a movement up. So can we already consider this as a counter trend?
Well, it is a counter trend. The question is it jeopardizing the medium and longer term trends? And so we'll have a look. Here we have our fin graphs mosaics. This is an hourly basis, so a perspective over the next few weeks. We have the euro dollar, cable, euro Swiss, gold, dollar Swiss, dollar yen, Brent, and the S&P future. So we quickly and first have a look at the euro. And we have here an investor's view. So it is the perspective over the next few quarters with our weekly charts, over the next few months with our daily charts, and over the next few weeks with our hourly charts. So we'll first have a look at the hourly chart. And as we can see, we're now in an impulsive move up. Last week we were just below 109. We were still corrective. The move has made it above these corrective targets, igniting an impulsive move up. At the moment, the trend is still positive, and the targets would lead us between 1256 and 1476. So at the moment, this counter trend, which was initiated mid-April, doesn't seem over yet, and there's probably another 2 to 3 figures to go. Now, if we consider this in the perspective of the longer-term trends, both our daily and weekly trends are still heading down. We'll start with the weekly to give the long-term perspective, and at the moment it is still describing a bear trend. The perspective here is over the next few quarters. We would have the possibility to still move down to 101,009 or 101, possibly until mid this year, early the third quarter. The risk index is in the oversold zone, but hasn't turned up yet to create a reversal. So at the moment, it's still a downtrend on the euro dollar on a weekly basis, and possibly we could expect a resumed downtrend down to almost parity. The daily has been correcting up. It hasn't turned yet in terms of our trend analysis. We could also see that the price has been hitting against our smaller envelope here, which is a sign of exaggeration. And our targets are pointing still between 103.80 and 98 over the next few months. So when we take both of these together, we believe that the move on the medium to long term is not quite finished, yet the counter trend that we see at the moment could extend another week or so, and possibly to 3 figures.
Mm-hmm. So when we look to the gold, so can we speak of a resuming downtrend there?
Well, on gold, at the moment there is a concern about rising inflation, and even if the Fed didn't give much guidance on the timing of rising interest rates, it does seem that it is committed to it. And so gold is financed through the interest rates. And usually when interest rates are meant to be rising, gold takes a hit. And so in these circumstances, we can see that basically the hourly last week has confirmed a resumed downtrend, making it a long-term bear, a medium-term bear, and a short-term bear. Now, if we look at them in detail, we could look at the weekly chart, which is still in a bear trend and would have targets leading us between 12.15 and 10 and 1010 or 1010. And if we take an average here, the possible target range is possibly around 1100. So we believe that gold could still continue towards the 1100 mark, and it still has about 1 or 2 quarters to go. So in that respect, we'd still be in a downtrend on the long-term weekly trend. On the daily trend, following the correction up that we saw between November and January, gold has resumed its downtrend. It still has a bit of time left, maybe a month and a half, and possible targets between 1148 and 1090. So that would, on average, would bring us possibly around 1115, 1120, which pretty much matches what we see on the weekly. So both on the daily and the hourly, our targets over the next few months would be in the direction of 1100. Now, if we look at the hourly, we've had some reaction early last week, but given interest rate rises concern, gold resumed its downtrend. It's now pointing to possible targets over the next few weeks between 1160 and 1142. So that's basically the upper range of what we are waiting here on the daily, and could be an intermediate level before reaching the 1100. So 3 bears here, potential continuous downtrend at the moment.
Thank you. So if we look to the equity markets, they were in Europe quite heavily hit. The euro is the main reason for this. Is this correct?
It is. And what we can see here, well, we'll first look at the S&P 500. So the S&P 500, we have been bullish for quite some time. We think the move is not over yet, and that basically economic growth is finding its way through the prices and the perspectives for further economic growth over the next year or so. Now, it hasn't been an easy way up. If we look at the daily chart here, the market has consolidated most of the time since December. We think it's actually climbing in a wall of worry, which is pretty sane in terms of it's a pretty healthy rise. We don't think the move is over, and it could extend somewhere between current levels and 2168 over the next few months. On the more longer term basis, if we look at the weekly, we could actually extend in our impulsive 2 targets, so aggressive targets and meant for a timing over the next 2 to 4 quarters between 2200 and 2400. So there's more to go here. The risk index is not yet overbought, so we think this move is not over and could extend for most of the year. Now on the hourly, last week's GDP numbers have hit the S&P, yet it was quick to rebound. We initiated a corrective move down, which we had highlighted. We had highlighted that possibility last week. We pretty much made it down to our corrective targets, although a bit early, and now the move is resuming its uptrend. We think this could be now labeled as an intermediate top, and we're probably looking over the next week to come to move higher. So in a slight correction down on the hourly, still moving up on the daily, still moving up on the weekly. So it's still only a potential intermediate top in an uptrend, and we would expect it to resume this uptrend. And so we will quickly look at the DAX. And as we can see here, the DAX has corrected quite strongly on the euro strength over the last few weeks. The euro has been a fantastic accelerator, or the euro weakness has been a fantastic accelerator of the performance of European markets since the beginning of the year. And the recent dollar weakness is bringing this process into a reverse. Now, at the moment, you're still in a bull on the weekly charts, you're still in a bull on the daily charts, and the hourly chart seems to be getting quite close to its targets. We believe there's probably a bit more downside possible, down into 1140, 11,500 down to 11,200, and would probably need to see the risk index oversold. But in essence, this is a correction in a medium term and long term uptrend. So we don't think the move is finished.
Mm-hmm. Thank you very much, Jean-Francois, for this week's analysis, and looking forward for next week.
Thank you very much.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.